he's expecting now from the Fed action and, of course, the market reaction as well. Adrian, hi, morning from a rained-out Mumbai. But tell me, what's the weather looking like for U.S. equities? Given that it's a 25 bips hike, that is something which was anticipated, but another hike in the offing. How do you think the markets are going to perceive that?
I think it's going to be fine for the markets because the backdrop is a robust US consumer and a corporate sector in the United States that's generating good profits. We had a very good numbers out of Meta, the owner of Facebook, this week. So we've got a story here where the top line is a bit better than people were expecting, and the corporate sector in the US has been very good at maintaining margins. And I think it's that micro fundamental that's driving the market higher. So the Fed's got an interesting situation here. We've taken rates up dramatically, but remember, we're taking them up from a zero level. And that was a dramatic response to a pandemic. And so I wouldn't sort of overstate this. We've moved by 5.25. I'd say really if we were at neutral, we'd have maybe moved by 200 basis points. So I think the Fed is probably in a good position where they'll be able to maintain rates at this high level. The economy's resilience will continue. And I think where there is going to be a surprise in the market is going to be in interest rate expectations. If you look at the interest rate futures, they are assuming very significant cuts next year, which I don't think make any macroeconomic sense. So if you do have trades on that are dependent on the Fed cutting rates, I think you're going to be disappointed. I think bond investors are probably going to lose money with an inverted yield curve. The curve was only more inverted when Volcker in the 1980s was the Fed chairman. And remember, he took rates up to 20%, not 5.5%, which maybe we'll end up going to. So I'm relatively confident on equities, on risk assets like equities, but I am nervous about the assumptions that we get interest rate cuts that are dramatic next year. And I think people are going to lose money in government bonds.
Adrian, another big change has been the US debt ceiling limit. And look, immediately after the debt ceiling limit, US has started their printing press once again. What implications do you think that could have in the second half of this year?
So this is a very important point you bring up. The US is running a fiscal deficit, I think around 5% of GDP. So part of the strength in the US economy is the fiscal impulse that the Biden administration has provided. And so there is an argument about next year that you won't have the same level of fiscal impulse, and perhaps that might be one of the growth risks for next year. So I think you bring up a very important point in highlighting that the debt ceiling emphasizes that the US government is spending more money than they're bringing in, and that is having a positive effect on demand in the US economy.
Adrian, interest rates, what I've learned over the years is they act like gravity, which is when rates they go higher, stock market should go lower. Either we need to revisit the law of gravity or perhaps reimagine why stock markets are ignoring interest rates.
Sorry, were you on holiday in 2022? Equity markets fell dramatically as inflation drove the central bank. So you're absolutely right. When inflation arrives, when it's above the central bank's target, that is very negative for equities because the central bank will have to raise rates, which means lower growth and a higher discount rate. And that's why 2022 was a very, very difficult year for both equity and bond investors. NASDAQ fell dramatically, as did most emerging markets as well. So I think equity markets did their job in discounting the move in interest rates, but they're forward-looking equity markets. And now I think it's going to be a debate between those that think we're having the Fed with rates above 5% for the foreseeable future versus those that are arguing that the economy is more vulnerable and that you're going to get the Fed cutting rates. So I think that's the mindset. Either we're at this level, or maybe they're going to go a bit lower.
Good to have you as always. Thanks much for joining in. How did the U.S. markets react? Well, the Dow Jones continued to inch up for 13 straight days on the trot. S&P 500, NASDAQ were a bit quiet. Asia this morning is in the green. That's the gift Nifty up 50 points or so.